Let's talk underused housing tax. I'm George Dube, saving the world from taxes, one bow tie at a time. What is the underused housing tax and why was it implemented? So in 2021, the federal government released their budget and introduced the concept of targeting non-residents of the country who owned residential properties and wanted to effectively punish them where the property itself was not being used appropriately in the government's eyes through a 1% tax. And going forward, well, the legislation is a little bit different what the concept applies. And so now it's going to actually hit quite a number of people that are investing in real estate or alternatively just own real estate. Conceptually as well, it probably was there to help be part of the solution for the housing crises that the country finds itself in. However, again, many people I think will express the opinion it's more there for political window dressing. But regardless of the purpose, it's something that real estate investors and owners of property are going to have to deal with. Who does the underused housing tax apply to? Again, when we're talking about non-citizens or non-residents of the country from a working perspective, we have one eye. However, again, the legislation is a little bit different and very technical, so this is just general comments. Please do refer to the articles in the actual legislation itself, and many of the articles you'll see are describing common situations as compared to what might be your situation. So a couple of areas where people are going to get snagged. One is they own a property through a Canadian corporation. There's going to be filing requirements. There could be a family trust. There may be scenarios where that family trust has a beneficiary that is not a Canadian citizen or permanent resident. We're going to have to be looking at joint venture agreements. We're going to be looking at bare trust relationships, partnerships. There's a host of things, rent to homes as another example, that are going to catch people off guard, and people are going to be thinking, oh, I'm not a citizen of a different country and I've been a resident of Canada for my entire life. Why would I have to worry about this? Well, you're going to have to worry in that if you do not file the returns and you were supposed to, stiff penalties will apply. So please take a look and ensure that for each property you own, if you're not filing, you're not required to, and if you do have to file, you're meeting the requirements. So what type of properties does the underused housing tax apply to? Again, here we have to be really, really careful. We've seen a variety of commentary, and generally it's going to be describing a residential complex, I'll call it, that has 3 or fewer units to it. And whether that's semi-detached housing, traditional housing, row house homes, condo units, etc., some of those things will probably be more obvious to people. The legislation, however, I would suggest strongly is unclear in terms of whether other properties may apply. What, for example, should be the application where we've got a storefront property on the main level and say 2 residential units above? Does that meet the test? What if instead there were 3 residential units over that store? What about a mobile home? What if that mobile home is more permanently attached to whatever? What about showrooms for builders? There's going to be a number of examples and ones we've been batting around back and forth with colleagues. We're uncertain. The legislation is very, very new. forms and whatnot were just released weeks ago. This is not something we're going to have answers to all the time. And so part of your discussion with your advisor is going to be, should we file even if we're not sure whether or not it's a requirement to file? It may be something where it's much more safe to file to ensure that there's not going to be penalties, assuming you're confident that you're not going to be required to pay any tax. Because remember, there's a distinct difference between being required to file the form and being required to pay the tax. And if you don't file the forms, penalties are applicable if you were supposed to. So yes, that residential property, conceptually, separate bath, separate kitchen, separate living area. I think the legislation refers to private. I haven't had a private bath in 50-some years. There's going to be some work on the phrasing and the interpretation of that legislation, and I don't think you're going to want to be on the wrong side of that. So please do take some time, go through the rules, talk with your advisor. Don't be caught unsuspecting. How is the underused housing tax calculated, and when is it due? Let's tackle the second question first. It's easy. April 30th of each year, where April 30th falls on a weekend, it'll be due the first business day of the week. In terms of how is it calculated, this gets a little bit more complex. Conceptually, it's probably not that challenging for most situations. It's going to be a tax assessment value that the municipality puts out, and it's going to be the greater of, the most recent sale price, assuming it was in when we're filing, for example, in April 2023, as of December 31st, 2022, the most recent sale price as of December 31st or prior to. That said, we can also file an election to essentially use a fair market value calculation. And that may be, as the government suggests, appropriate where we've got a mixed-use property, for example, where not all the property should be allocated to the residential unit itself. But with that valuation, it needs to be, according to the forms and legislation, prepared by somebody with appropriate credentials, not related to you, somewhat similar to, in most cases, qualifying for financing or refinancing. And it has to be current, and specific dates are provided for that. Effective dates as compared to when the valuation itself actually took place. So it is, again, something where it seems like it should be really straightforward, but you'll want to meet the specific definitions of the legislation to ensure if you have to pay tax, you're paying tax on the right amounts. What is an excluded owner for the purpose of the underused housing tax? And maybe first we should address what the significance of that is. So such an owner is someone who's not going to be forced to file the returns. There's a bit of a list. The primary ones that will catch people, or relieving mechanism, will be an individual who is a Canadian resident or citizen. Could also be public companies. The term we use is His Majesty in terms of various government ownership. There are REITs, SIFs, mutual fund trusts that may not have to file, co-op organizations, etc. Go through the list. But again, be really, really careful with that concept of an individual. Because that individual, are you really, and I know this sounds odd, acting as an individual? Or could you be in a joint venture scenario, a bare trust scenario, some form of scenario, partnership, where you're actually not considered to be an individual. You may be something other than what you think you are, and have a filing requirement that can catch you off guard. So yes, excluded owners are great. Be careful, you're actually an excluded owner. Are there any exceptions or exemptions from the underused housing tax? And yes, there's a plethora of them that exist, and I have to refer to my notes here to kind of capture some of the broader categories. But again, please, please, please talk to your advisor, look at the legislation to see specifically whether or not it's going to be applicable in your case. And I appreciate that in a variety of instances, that legislation is going to be unclear. So consider whether you're better to take the position that it's exempt versus not filing and finding out, oops. So there's going to be a category of exemptions specifically relating to the occupancy of the property. How much is it being used and who's it being used by? And where there are tenants that are not related to you using the property, and they meet the various tests required of that, one of which is a written agreement. And a quick question will be too, what if that person in relevant provinces is on a month-to-month lease? It doesn't have a written agreement. There are going to be requirements where you're renting to family members. Certain family members, in order for that to qualify, they have to be paying something in the neighborhood of fair value for the rent, which the government has set aside as 5% of the value of the property. That is going to tick off, I'm quite sure, a number of people and catch them unaware. Because the government's telling you what you can or can't do and who you can or cannot help. And that's what the legislation is going to say. And filing requirements are based on that. There are going to be exemptions based on the property's availability. So the property may not be available, for example, 4 seasons. There may have been a purchase during the year, significant renovations during the year. There may have been, as an example, some, let's call it disaster, act of God, where, whether that's kind of a tornado, fire, hurricane, something to that effect, that impacts whether or not someone can be living in the property. We're going to be looking at who the owners are. So certain exclusions will apply, for example, to specify Canadian corporations and partnerships. And so with those corporations, one of those tests is going to say something to the effect of all of the shareholders have to be Canadian residents, citizens. We can have somebody that's not falling into that test, but they can't have more than 10% of the property. Whereas we flip over to a partnership or a trust, for example, and now all of a sudden those tests in terms of the non-citizens or resident become much more strict. And one person, one small fraction of ownership may put us offside. So yes, those exclusions exist, but be careful. We also have exclusions based on where the property is. And again, this is going to be a little bit challenging. So conceptually, where the property is not in a larger municipality, for example, then the test may be met where the property doesn't have to, or is excluded and you don't have to pay tax onto it. But it's really, 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 in my mind, not clear where those areas are. There is a website available that allows you to type in the postal code, and it will tell you whether or not the tax is payable, not payable, or they're not certain. And a few of the test ones that I used in Southern Ontario, for example, it was unclear. So if the website's unclear, the source of information is unclear, you're going to be unclear, I would expect. So again, something that can't be taken lightly. Don't magically assume just because you live in a small town or the property's in a small town that there is an exclusion. Pay careful attention to the precise definitions as compared to just the phrases on the form itself or summary information that you have. There will be people caught unaware, and it will be very expensive. Are there penalties and interest if we don't file the underused housing tax forms? I know it seems like a silly question. Obviously there are. And we may complain about the quality of the legislation that was written. But one thing I think most people would have to admit, they certainly spent a lot of time defining what various penalties and interest provisions do exist. And so to start with, to get people's attention, if we don't file on time, the government has the ability to levy a fine, $5,000 for an individual, $10,000 for a corporation. Keep in mind, if you own several properties, that can add up really quickly. But it doesn't stop there. There's also a 5% tax or penalty on the taxes themselves, and then an additional 3% for every month that we're late. Other penalties, some are at $40,000, some are $100,000. Various percentages, up to 200%. It can be extraordinarily expensive, devastating not to meet filing requirements. Please do take the time to ensure if you do file on time. And yes, the government has the ability to use lower fines. They have the ability to waive some penalties and interest. And that may be more likely at the beginning of the first year, no guarantees, than later on. But I would kindly suggest that you never want to be in a position where you are relying on the mercy of Revenue Canada. It would be much nicer to be able to say with 100% certainty, you've met your filing requirements and no penalties are applicable. So how does the underused housing tax impact real estate investment decisions? There's going to be a host of changes that investors make. More of those changes we're going to learn as time progresses, or more clarification on the legislation itself. But give some thought to what type of structure are you investing in? So where there's, for example, a non-citizen involved in this in some fashion, certainly going to be a lot closer look at the actual beneficiaries of a family trust, for example. Trustees, because of what appears to be some liability for the trust itself, which is, as I understand it, virtually unheard of in a trust scenario, are going to want to be paying attention. Where we're using corporations to hold properties, maybe we're going to have more of a joint venture scenario where our corporation holds our percentage, and if there are non-residents or non-citizens involved, they may have their ownership through a separate entity. We're going to be much more careful with partnerships. We're going to be looking at the geography of the properties we invest in. We're going to be looking at the types of properties we invest in, perhaps to ensure that these are not considered residential properties targeted by the legislation. So whether we're talking where we're investing, the type of properties we're investing in, how we're investing, and who we're investing with, all of these may be impacted by this legislation, not just in terms of future properties, but perhaps revisiting how we own existing properties. So please do take the time considering your situation and chat with your advisor to make most efficient use of this. 1% doesn't sound like a lot, but 1% on the value of a home is a tremendous price to pay on an annual basis. I'm George Dube, saving the world from taxes, one bow tie at a time.